I'm Oliver Sloup with Blue Line Futures, coming to you from the Chicago Board of Trade with another episode of Tech Talk. It's Wednesday, April 7th, and it was a bit of a snooze fest in the grain markets today, or at least it seemed like that relative to what we saw last week with that volatility expansion following the USDA report. Now, we do have another USDA report out on Friday. I don't know that it's going to pack the same punch that we saw last week, but we'll be obviously monitored very closely by many market participants. We do have those estimates up on our site. If you go to bluelinefutures.com, you'll be able to see it there. Just click on our research section, the free tab, and click on it there. And we will update that as soon as that data is released and email it out to client subscribers and people who are on a trial. If you want to get on that trial, email Oliver at bluelinefutures.com and we'll be sure to put you on that distribution list. So you'll get the data as soon as it's released. Now we've got 4 markets today: corn, soybeans, wheat, and live cattle. To kick things off, we've got May corn here. We've seen a lot of people on social media, whether it be Twitter or Facebook or other chat rooms, who are super bullish or super bearish. But if you look at where we've been really since the start of the year, we've been sideways. We're still pretty optimistic on prices, but we want to see consecutive closes out above technical resistance. We've gotten 2 attempts at it here. February 9th USDA report, we poked our head out above there. Weren't able to get follow through. Same story in last week's USDA report. Poked our head well above there, but weren't able to get follow through. We're treading against that line right now, but we want to see follow through. Maybe we poke our head out above there again with Friday's USDA report, but follow through will be the key. If we cannot get that follow through, I wouldn't be surprised to see prices continue to chop around in a sideways range. Call it 530 on the bottom side to 560. We're still pretty upbeat on corn futures, but really want to see the technicals really firm up and make that next move higher here sooner rather than later. Now moving over to the soybean market, similar story here, not as clear of a sideways trend and a lot wider of ranges. We peaked out here at the end of last year, sold off, started to consolidate, and then made kind of a new higher trading range. We threatened to break down below it last week and threatened to break out above it, but here we are right smack dab in the middle of that range. And as with corn, we're still pretty upbeat on soybeans, but we really want to see some technical follow through here in the very near term. If we can't get that, probably continue to just chop around in a sideways range. A breakout above this 445, 450 level probably takes us to retest those contract highs at 1460 and maybe even a little bit bigger of a breakout from that point. Now, aside from the May beans, we're also pretty upbeat on new crop beans as well, thinking that they could potentially stage a little bit stronger of a rally here in the next couple of months. So although we've been mostly sideways for corn and soybeans, we're still a little bit friendly here going into that USDA report. A conviction close out above technical resistance would kind of reinvigorate that bullish thesis and spirit, not just for us, but I think other market participants as well. So technical is going to be very important going forward. Now, moving over to the wheat market, a lot different of a story. We had a double top back here in February. Sold off pretty good and then held trendline support, which goes back all the way to July, as well as the 200-day moving average and the psychologically significant $6 handle. We've been pretty bearish on wheat, or had a bearish tilt in our bias for the better part of the last 3 months, but this past week's price action has neutralized that. We went to outright neutral here this week in our daily grain express. What would shift us to a bullish bias is consecutive closes out above this 530 level. This was previous resistance, a breakout point here in December, and then that became support through January and then the breakdown point in March. So if the bulls can achieve consecutive closes back above 630, I wouldn't be surprised to see that encourage some momentum buyers to step in and potentially put a little bit of a squeeze on recent short sellers from that double top. So again, just to recap, fairly friendly on corn and soybeans, neutral on wheat, but kind of on the verge of turning a little bit more bullish if we can get a good technical close here within the next week. Now, wrapping things up with the livestock market, live cattle continue to climb higher, and we've been upbeat on live cattle for a while now, really since the start of the year, on the idea that fund flow and fund participation would continue to ramp up. We've gotten that, but as we get these higher prices, our bullishness starts to get a little less and less, and that may sound a little odd, but price is what you pay, value is what you get. So the higher the price, the less value there is to the buy side. So our optimism is still there, but we wouldn't be surprised to see a pullback, especially looking at the RSI where that is coming in close to 70, which isn't a standalone indicator that says short this market, but I certainly wouldn't be buying at these levels. The cash market has firmed up substantially here this week, which is nice to see, but a large part of that probably baked into the cake, which can be reflected by the prices that we've seen here over the last 2 weeks, or the rise in prices that we've seen over the last 2 weeks. So still optimistic on cattle and livestock as a whole, but thinking a pullback is probably welcome and healthy to keep things intact for a longer term perspective. So that's what we're looking at. That's what you should be looking at too. This has been Oliver Sloup with Blue Line Futures from the Chicago Board of Trade. Remember, trading futures and options involves substantial risk of loss and is not suitable for all investors. Thanks a lot.